The sell-off continues with the S&P dropping 1.76% to close at 58.49. We opened this morning just below the 6,000 level and immediately sold off basically through the entire trading session, closing just above the all-important 5,800 level. This was the low after trading during the first week of the year, where we saw a pretty significant sell-off at that point in time as well. So we're coming right back down into this level. We have broken multiple support levels over the last week. We mentioned this in yesterday's video, the support level right above 5,900, as well as right around the 6,000 level on the S&P. Both of those obviously have broken, and as we mentioned in yesterday's video as well, the last line in the sand is this 5,800 to 5,850 level, which we have now entered into in today's trading session. So it's going to be super important that this holds and bounces. If not, we're expecting more downside to come. A couple positives that I will note is the bulk of the options volume today was between 5,850 and 6,000. So even though we closed at the low today, many strikes had much higher volume. In addition, the gamma exposure at the 6,000 strike is also a major target. So we're kind of sitting in between these two major negative gamma exposure concentrations. And again, the key is going to be holding this 5,800 level. In terms of our historical gamma exposure chart, we have clearly been in negative gamma exposure territory for basically the last week and a half. And this is one of those things, the longer we remain in negative gamma exposure territory, the more likely volatility is going to take hold and explode to the upside. We saw the VIX close above 20. This is our mid-range volatility regime. So above 20 is where volatility starts getting more moderate out of a low volatility regime and into the moderate and high volatility regime. So definitely getting a little dicey on the volatility index.
Yeah, thanks, Anthony. I've been watching the whole moving average on the VIX. You can see Friday we closed above the whole, which I explained in the newsletter potentially left the door for volatility to expand again. Of course, we also have this upper Keltner channel that's continuing to move higher. If we flip over here to the GEX levels chart, we can see that we have 25 as the upper dealer cluster zone on the VIX right now. Now, in recent weeks, we've had multiple days where we saw volume elevated at 30 and 35 and even 40, much higher volume than we've seen today, actually. But it looks like we have some GEX that has grown at 30 in recent weeks. I don't know if that means we actually spiked to 30 with this progression in volatility, but it's certainly something we're going to want to watch. And I would prefer to see the VIX break below and hold below the whole moving average to signal that this volatility increase is potentially ending for the current round. So that's what I'm watching, and it's amazing how quickly the market dropped today. There's an old saying that markets don't usually bottom on Fridays. I guess that's something we saw this time at least.
Yeah, that's right, Sean. We basically gave back all of Friday's gains today. So that volatility really increasing, especially over the last couple of trading sessions. Next, let's move over at a few names we've got on our watch list. I mentioned in yesterday's video that we'd like to see Nvidia come back down to the 115 level or below. Well, we certainly got that today. Nvidia closing just below the 114 level. Huge move though, down nearly 9%. Pretty scary move if you're an Nvidia shareholder. But from our standpoint, we have our hedges on in the portfolio, so we're collecting profits on those. This gives us opportunity to do a little speculation. With Nvidia, I like the fact that it has come down into this level. As we were mentioning, we wanted to see a retracement at least a little bit lower than what we had seen on Friday. So we got that back down into the 115 zone. On the bearish side, Nvidia is in negative GEX territory with large negative gamma exposure concentrations, really down to the 110 strike, and we see some growing at the 100 strike as well. That's the bearish viewpoint. The bullish viewpoint, though, is any bounce that comes into play, we could see a significant gamma squeeze back up into the 125 to 130 level, which would be just getting above that zero gamma exposure line. 400,000 contracts at the 120 strike, nearly 300,000 contracts traded at the 130 strike. So heavy options volume coming in at these higher strikes. All the while, Nvidia is reaching a previous bounce zone back from the end of January. So given that we have hedges on in our portfolio and we're collecting profits on those hedges, this gives us a little bit of room to speculate. I like the idea of entering a potential out of the money call debit spread targeting the 125 to 135 zone. If there is a bounce over the next couple of weeks on Nvidia into, let's say, the March 21st expiration, that would be a huge payoff for those out of the money call debit spreads. So this is not something that we would go all in on. Of course, we practice proper position sizing, so this would be a relatively small 1 to 2% type of speculative play in our portfolio, but that's definitely something that we're going to be looking at in our community Discord first thing in the morning. By the way, if you're interested in following along with us, I'll put a link down in the description below.
Thanks, Anthony. Even with carnage in the market, we're still able to find stocks that have relative strength. And Intel, amazingly, since it was a laggard for so long compared to other semiconductor stocks, Intel has been showing strength. It had this big move up from the February lows, and it looks like it's consolidating mostly sideways now. Despite today's big red candle, we have the Keltner channels in an uptrend, with the middle and upper channel especially pointing higher. 22 represents the middle Keltner channel. And so the chart looks okay on Intel. Let's take a look at what the gamma exposure picture looks like. Today we saw volume at 25 and at 30. We have the upper dealer cluster zone at 25, which it actually touched today. And so I usually don't like buying stocks right after they've hit that upper dealer cluster zone. But in this case, because we have a couple of other factors we'll look at in just a second, I'm still thinking we have a chance to revisit 25 and potentially up to 28. And of course, we had this volume at 30. So Intel, something to keep an eye on. It has positive overall GEX. This 28 cluster that I was discussing has a March 21 expiration. And so there's definitely potential for Intel to move higher in coming weeks.
Thanks, Sean. Metals were one of the bright spots in the market today. So I want to take a look at GLD trading at 266.74, up 1.32%. We did see a pullback over the last several trading sessions at the end of February. This being after we had basically a double bottom or a mini double bottom followed by a huge rally up into the 270 strike. This is still the largest gamma exposure concentration, and we are seeing gamma exposure growing at higher strikes all the way up to the 290 strike. So we've got our eye on this 270 to 275 zone into the March 21st expiration. We're positioned for a move into this zone for that March 21st expiration in our options portfolio. The move today was a step in the right direction. We actually got in initially on the pullback here a couple of trading sessions ago. And with all the tariff threats and the inflation concerns, I think GLD is poised to move higher. And it looks like the gamma exposure at these higher strikes are signaling market participants are gearing up for a move even higher beyond the 280 level. And this is probably going to be targeting the April to June timeframe. So despite the recent pullback, this trend still looks in place, and I think higher prices are coming on metals and on GLD in particular.
All right, Anthony, my last one today is TTD, the trade desk. Quite a lot of carnage on this chart as well. We really precipitous drop here in the middle of February. The whole moving average finally caught down to the price and is actually below the price now at 62.22. With the price currently at 67.17. The chart itself looks pretty bad. However, of course, sometimes we're looking for these oversold bounce candidates. And this one happens to have some interest in the 80 area that we'll look at in just a second. And of course, with these Keltner channels descending, eventually these two are going to meet somewhere. This is what surprised me. We actually have positive GEX with TTD now. It wouldn't be surprising to see it drop to 65. There's also a noticeable negative gamma cluster at 60. So these are definitely some downside targets if the price were to continue declining. But with positive GEX and this large positive strike at 80 on March 21, that definitely catches my attention. And we're almost to this dealer cluster zone at 65. all of the volume today was at higher prices. We had pretty decent volume at 70, 75, and especially at that 80 potential target.
And if you want access to our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies that we are rolling out this week, head on over to geeksoffinance.com. You can also take advantage of our winter 2025 promo, $300 off our yearly portfolio manager tier subscription. Use code winter 2025 at checkout. We're ending this promotion tomorrow, so take advantage of that while you can. Members also get access to our community Discord and all of our premium channels. You can follow along with the trades we're making in our own portfolio. And we also have a number of great traders in there sharing their own trade setups and strategies as well. It's an awesome community, so definitely check that out. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.